Welcome back, everyone, and welcome, Julie, my co-host. How are you, Julie?
I'm fine, thank you. How are you this morning, SeeWing?
Fine, thank you. Fine, thank you. So, another episode. So, today's topic is very interesting. We're talking about rental property, the multi-income stream, but we can take it to the next level, right? You're getting more than one multi-income stream or strategies. And
Hey,
so, we can go over one market, one housing market where you can make this work. So, we have several investment models that you could leverage into once you create the foundation in this particular market. So very, very exciting. So yeah, the future is very, very bright real estate investing, regardless of what's going on in the economy and this and that.
right.
So Julie is again, she's one of our investors. Many of you know, we've been doing joint podcasts for several years now, and so you only have bought multiple properties from our investment network, and Julie is putting yourself in the shoes of our several thousand members in our community, as well as any new people watching this video for the first time. So you are sort of a representation of the feedback that I want from
Mhm.
as I present this presentation, right? So
Right.
yeah, of course, Julie, she is not aware of what I'm going to discuss. So it gives Julie the spontaneous reaction and the thought process. Like I said, hopefully your thought process is a representation of all the potential investors out there to determine whether my presentation, my strategies make sense or not. Of course, is not for everyone, just like any other investment methodology.
Right.
But some of you can resonate with the strategy we are, as always, we discuss. So again, is everybody have their own,
Mhm.
everyone have their own unique goals and objectives. They have their unique buy boxes, their comfort level and whatever. But at the end of the day, just learn and educate and make an informed decision according to your specific goals and objectives. And finally, this is my disclaimer, as always. Everybody's situation is different. This is there's risk involved in any investments. There's a risk loss of principal. Please consult your own
Mhm.
financial advisors to determine what is the best for you based on your risk tolerance, your
Right.
goals, and your objectives. All right.
Absolutely.
Yeah. So without further ado, let's go ahead. Why I use this title as a rental is a multi-dimensional, numerous income streams and investment models. And of course, you guys are thinking, what is Mr. Yee is trying to talk? Yeah, but the first few slides, Julia and I went through this many, many times over the past few
Mhm.
years on our podcast. So let's run it by real quick, then we can get to the meat of my presentation. And I'm going to show you at least three investment models where you can pivot into down the road after you create your foundation in this particular housing market.
Mhm.
Okay, Julie, sounds exciting?
Sounds good.
Yeah, so first and foremost, rental property remains the most historically proven asset class in the world because 40% of the profits is above the iceberg,
Mhm.
and at least 60% of your potential short and long-term profit are below the iceberg, which you cannot see.
Right.
But that's the beauty of a rental property is because your cash flow and your appreciation, you can see it, you can feel it, you can,
Mhm.
but the underlying under the iceberg is uh,
Right.
paper loss, the offset against your passive income or active income,
Mhm.
depending on your tax strategies. Consult your tax advisor, or depreciation, tax write-offs, and of course the power of leverage.
Right.
No other asset class in the world where you can leverage, you can put 20 to 25% down payment on an asset class like real estate, that will give you the leverage, give you the fixed rate 30-year mortgage. Using the leverage will allow you your return to be much higher than normal. And of course, the principal pay down, your tenant
Mhm.
going to pay down your debt. So the longer over time your tenant's going to pay down your debt, your equity increases accordingly based on your loan to value LTV ratio plus the normal long-term appreciation associated with owning hard asset income property.
Right. Right. That's
Yeah,
a mouthful.
yes, it is. Yeah, and I did not stutter not like I normally do. So just so, from a high level, I mean, we're not going to spend too much time because we have
Sure.
done, you and I, Julie, have done numerous videos about
Yes.
the four benefits of rental property, as you can see right here. Real
Hmm.
quick. Yeah, cash flow, tax benefit, appreciation, leverage, and so again, no other class come even close on a historical basis compared to
Exactly.
rental property. Now, here's the catch. He's the next multi-dimensional aspect of this asset class, above and beyond the for-profit or four or five profit pillars.
Hmm.
And once you buy your initial property or properties, you have the potential, if you wish, to pivot. What I mean by that, you can use the same property you initially purchased, presumably as a long-term rental, which Julie, you and I, we practiced the investment model of buying long-term rental, annual renewable lease, sit it or
Hmm.
forget it, and have the property management manage your property over time, become almost a passive investor and
Right.
enjoy the profit and rental income while you're sleeping without trading time for dollar, without spending any more time than necessary, without any in a way. I mean, it's just almost like a passive investor, just like owning stocks and bonds. You can
Absolutely. Hmm.
so the first potential pivot you can do. Again, the foundation, you and I, Julie, totally agree. The foundation is you buy based on my opinion, okay? I mean, some of you out there may disagree with me. That's fine. We may agree to disagree. But in order to minimize your risk, Julie, I'm sure you agree because you have a number of residential portfolios. The key is buy a property that can cash flow initially, right? That's the,
Absolutely.
that's a foundation of building a real estate portfolio for your ultimate retirement in the future. So
Hmm.
typically when you put 20 to 25% down payment, maybe even 30% down payment, make sure the rent you're collecting covers your monthly mortgage, taxes, insurance, property management fee, maintenance, and vacancy. And at the end of the day, you still have positive cash flow. Could be $100, could be 300, could be 400. That's a foundation. So long-term rental is a foundation. Agree, Julie?
Oh, I agree with you 100%. I mean, that's what we started looking at when we were first uh, beginning to get involved with your network is the long-term cash flow, effects of the investment property and all those others. You showed the little
Yeah.
iceberg thing. All those other things were secondary. Well, some of them we didn't even know existed. So that was one advantage of studying under you.
Yep.
But yeah, those were all secondary for us. But it's almost like if you can achieve the first one, the other ones will fall in line.
Exactly, exactly. So the beauty, if you buy now, moving, the next step is if you buy in the right housing market, and that's the key, right? Too many people I've seen in my more than 20 years of investing and coaching and consulting, too many people from the get-go buy in a wrong real estate market and then they have a negative experience. They cannot pivot, they cannot adapt because that market is very limited for whatever reasons.
Mhm.
But if you buy in a housing market, which I'm going to share with the rest of your audience in a few minutes, which market, which is prime potentially for you to convert your long-term rental into some other investment models. And I begin that with converting your long-term rental potentially now. So, look, if you're gonna maintain your long-term rental investment model for years to come, that's perfectly fine, and you set it and forget it and focus on
Right.
what's important to you. You're not trading time for dollar. You can focus on your family, your travel, all these kind of things. And don't even bother with your investment portfolio. Spend 1 to 2 hours per month in
Right.
managing, somewhat managing your
Right.
risk portfolio, whether you have 5, 10, 20, or 30, you can still only need 1 to 2 hours of management per month, right? That's a long-term model, right?
Right. That's correct. Absolutely.
Yeah, hundreds of my investors over the years have continued to use this model, and likewise with you, Julie,
Right.
you have a nice portfolio you
hmm
purchase, and you only spend 1 to 2 hours per month. Briefly tell to the audience why you enjoy this investment model.
Oh, wow. Well, I think, like you said, it is relatively passive. Once you get through the initial purchasing and finding the right property and everything, I literally spend an hour. With six properties, it doesn't take that long, and we've had them for a few years now, so I kind of got the system down. It takes less than an hour for me to manage them. Less than an hour a month. Let me just be clear about that. Less than an hour one a month for me to manage the properties. So it's literally stress-free for me at this point, worry-free for me. We've got a great management team in place back in upstate New York, and I don't worry about anything. It's really a great experience.
That's the idea. That's the idea. Yep.
hmm
Very well said. So let's continue. So the first potential conversion you could do if you're a long way from retirement, 20, 30 years away, you could, pivot, meaning instead become passive, if you will, with long-term rental, you can convert potentially to Airbnb short-term rental. Or if your property allows, you have a nice backyard, you can create a additional dwelling unit like an ADU,
hmm
which is quite popular. Or you can convert your long-term rental into a mid-term rental. Okay, mid-term rental is an up-and-coming asset class. Look, all these alternative investment model I'm going to talk about, although I'm presenting this, but I don't have any connection with any of this investment
hmm
methodology. I don't have a hookup or connection uh,
Okay.
with this other type of asset classes, right? I mean, you as an investor watching this video have to do your own research and due
Yes.
diligence to look into these different types of investment model and
hmm
make your decision accordingly. Okay.
hmm
So Metromental is really, I mean, is like I say, is an up and coming asset class, and there's some real estate gurus out there you consult with if that's what you want down the road. So Metromental is, you rent for, I mean, 30 to 90 day plus.
hmm
Typically, you typically get about 3 to 5 of those tenants per year. You have to, furnish the unit, spend 5 to 10 grand extra
Right.
furnish your house, and then this marketing platform, you feel free to Google furnishfinder.com, and and of course Google other ChatGPT. Use ChatGPT. I mean, that's a powerful
Yes.
search engine, right? ChatGPT. I use it almost every day.
Oh, I do too. Yes, it's great.
Everybody. Yep. That's living standard.
That's where we are now in life.
That's right. Artificial intelligence is changing the world. Right.
hmm
So yeah, so you can do Airbnb listing, other marketing platform. You can market your mid-term rental. There's a lot of resources out there. Look, there's a lot of tools and resources and real estate gurus out there you can hook up with. I'm not going to recommend anybody because I don't have any, affiliate connection with
Sure.
any other of these investment models. I just want to
Right.
expand your horizon to see
Yes.
in the future. The world of real estate investing is so exciting, so interesting. Julie, when I started investing more than 20 years ago, I
Right.
really have no technology.
Right. I'm sure. Yeah.
Yeah, internet was just barely, starting out, and
hmm
I don't have internet. I don't have ChatGPT. My
Right.
property management will kind of suck, right? Because they don't have the technology to
Right.
have a platform as a business.
Right.
So I suffer a lot, in my early days of investing more than 20
I
years
bet.
ago. But
I bet.
nowadays people are spoiled because they are so whatever investment model you guys want
Mhm.
out there, Airbnb, short-term rental, long-term rental. There are tools and resources out there. There are softwares out there. There are technology. There are subscriptions out there.
Mhm.
ChatGPT, all of it. You can do almost everything. All of the stuff, short-term, mid-term rental, whatever. You can still do it remotely. You don't have to
Right.
be next door to the property. that you're doing all this investment model. Is it an amazing world we live
It really is amazing. It's really unbelievably amazing. So yeah, I mean, there's there's pros and cons. I think there's so much information out there.
in?
It's almost impossible to say, to stay ignorant. But then on the other side, there's so much information out there that it can create this deer stuck in headlights mentality because you don't know which way to go. So you really
Yep.
have to know what your goal is and what you're looking for.
Yeah, a lot of people have this, shiny object syndrome,
Yes.
and
Hmm.
and you have to define your buy box, right? Whatever you
Exactly.
use a
There you
buy
go.
box.
Hmm.
My buy box from the get-go, from 20 years ago, and I still practice my investment model is buy long-term rentals, one to
Yes.
four units, 30 using a 30-year fixed rate debt
Right.
and a scale 1 to 4 unit. I don't care how many doors or how many units you
Hmm.
scale over the next 15, 20 years.
Right.
Still, I will maintain my own personal investment model. This is
Hmm.
my buy box. Everybody have their own unique buy box. Am I right, Julie?
Hmm. Oh, absolutely. Yeah. And you have to know that going in. Some people just want to own real estate just because their neighbor did or whatever. So you really
Right.
have to know what is your goal? What are you trying to accomplish
Exactly.
within, by
Exactly.
investing?
Exactly. So anyway, if you or become successful using the midterm rental strategy, your rents could be at least 50% higher monthly than a long-term rental rent that you're collecting. So that is a good motivation. So who are the midterm renters? They are traveling healthcare, traveling nurses, or families, people relocating from one area to another. Okay, and then there are midterm corporate leasing, there are digital nomads, there are traveling business executives, insurance agency, people got displaced by fire, and the insurance company is going to pay the claims. They have to live
Yes.
somewhere for the
Yes.
next 3 to 5 months, and midterm rental space is a good place, right?
Yes, absolutely. That makes a lot of sense.
And of course, there are construction workers or prime for midterm rentals in
Yes.
a particular market that we're going to talk about. There's so much construction going on in this market. You can have unlimited construction workers that can potentially you can rent to, just to name a few, right?
Right. Absolutely.
Yeah,
Hmm.
midterm rental. Once again, before I go any further, okay, the recap on midterm rental is not passive. Okay,
This is true. Good point. It's
even
good to make that distinction.
Yeah, even if you use a property manager, there are some property managers that can do mental rental managing for you, but a lot of people
Mhm.
they do self-managing, whether they are local to the area or that they are buying, they have a mental rental from out of state. You can still self-manage. You can still do it remotely, but suffice to say, is not long-term rental. Set it and forget it,
Right. Right.
especially at the initial stage of your purchase of your midterm rental,
Mhm.
you have to spend 5, 10 hours per week to set up the
Yes.
system, process, and procedures, right?
Right, right, right. And I think that, it's like you said, it is important to investigate that market because I think a lot of gurus in the industry have made it look like it's so simple, but just taking into consideration the additional expenses. You do have to furnish the property,
Yep.
so that alone, it may be several years before you begin to really cash flow. So
Yeah,
things like that are important to look at.
exactly. Yeah, there's more risk involved, because
Yes.
it's more active, if you will, right? It's active in business, right? You will become a business owner, you become an entrepreneur, and
Right.
you have to. Another question is, do you have the skill set to do it? What I
Yes.
mean, the skill set, you have to do to make a midterm rental work. You have to create long-term relationship with the hospitals, with the insurance agencies,
Hmm. That's good. That's
nursery
true.
agencies. You have to
Hmm.
do cold calling. You have to do thousands of cold callings on a weekly basis.
Yes.
It's from the beginning. So you act like a professional salesperson.
Hmm. Hmm.
You have to go out there and get the leads, get get the
Right.
investors in.
Mhm.
It's not like it's not like long-term rental. Yeah, our property
Right.
manager will easily find a long-term renter for us, right?
Exactly. Exactly.
Easily. We do nothing, and we could
Hmm.
long-term renter quite easily over the years, because of our model. But when you switch over mid to rental, you have to spend some extra time. Do we have the ability? Do we have the mindset and the skill set and the stress level to overcome rejection?
Right.
you will get thousands and thousands of rejections as you try to
Right.
market to the nursing agencies,
Hmm.
hospitals, relocation workers, whatever, right? You have to create a relationship. A lot of people can't do that, especially when you have a
Hmm.
full-time W-2 income job. You,
Right.
number one, you don't have enough time
You don't have the time.
to create a midterm rental asset class.
Yeah.
Even if you have time, do you have the skill set? Do you have the stress level?
Hmm.
Overcome rejections
Right.
to create a marketing platform
Hmm.
for midterm
Hmm.
rental property? Does it make sense?
That's a good point. Yeah, it's a lot more effort, and it can really turn into a full-time job.
Yeah, absolutely, absolutely. Or you can, crash and burn. Okay, you lose your money,
True that.
you can't get a rental. The worst case, the best case is the worst case the for whatever reason you didn't do enough research, the middle rental situation does not work for you. You can always pivot back to long-term rental, which
Right. That's true.
so that's why I'm one of the few real estate gurus out there
Hmm.
that that recommends you buying a long-term buy and hold cash flow strategy first and foremost.
Hmm.
Okay? That's the
Hmm.
foundation.
Correct.
If you
Correct.
if you pivot into other investment models like short-term rental, mid-term rental, if it doesn't work, you always pivot back to long-term rental.
Right.
But a lot of people make a lot of mistakes to this
Hmm.
day. Every day I see and hear people that they bought a midterm rental like for $500,000 or $700,000 single family home in Denver, Colorado, in Seattle,
Right.
Washington, these high cost market,
Yes.
knowing that you cannot rent a property for long-term rental, but you
Right.
buy just for midterm rental, thinking it's going to work. The midterm rental does not work.
Not
You
gonna work.
go back to long-term rental because the rent to value ratio in this high
Yes.
cost market does not.
Hmm. You're right. That's a very good point. Yeah. So I think people have to really consider that. And I think that, like I said, the gurus can make it look like it's so easy. And it's really, there's just so many moving parts that you have to evaluate before you make that decision.
That's right. That's right. Well, the successful, people, they make it work. Of course, it's
Mhm.
in any asset class, right? You're always going to find a handful
Absolutely.
of people that just killing it, right?
Hmm.
Just blowing out of the water. But
Right.
every one success story in any asset class investment model, there are
Hmm.
10, 15, 20, 50 people who crash and burn and lose
Hmm.
money, uh,
Absolutely.
thinking they can make a killing, thinking they can get rich quick scheme, and they crash and burn for whatever reason. Make sense?
Yeah, absolutely. And 100%.
So you have to understand your risk tolerance. You have to understand your buy box. You have to have the capital. You have to have the money
Hmm.
make the down payment and to furnish the rental, fully furnish it, and all the maintenance costs and the vacancy costs that might still come, even if
Right.
you run a midterm rental, because if you rent to one midterm tenant for 90 days, fine, you collect a whole bunch of rent,
Hmm.
then you have to start over again. You just spend hours and hours of cold calling to find your second midterm rental. And during the 2 months of vacancy, whatever,
Right.
then you lose money based on the
Do.
prolonged vacancy.
Absolutely.
So
Absolutely.
you have to do your research. You have to run the numbers to determine the vacancy cost, the maintenance cost, the upkeep cost, and
Yes.
if the
Mhm.
rent doesn't cover 50% more of the
Right.
long-term rent versus your midterm rent, then the cash flow may not even be that great in the first place.
That's right. Yes. Yeah. It defeats the whole purpose of why you're doing it.
Exactly. Okay, all right. Okay, that's enough for the midterm rental situation. And then the final investment strategy is once again is up and coming. Julie, I don't know whether you heard of this or not. Have you heard of
Hmm.
co-living?
No,
Co-living.
I haven't. I don't think I have. Co-living. No.
Uh, Google, do a ChatGPT or Google whatever. Pass
Okay.
PassSplit is an online platform. It's really up and coming,
Oh,
and wherever you can rent by the room. You,
right. Oh,
you
interesting.
You can rent each bedroom and all the tenants, they share a common space, they share the kitchen, and and oftentimes maybe they don't share the bathroom, But you connect people looking for affordable place to live. Look, we are having a nationwide crisis, right?
Yes.
As you know, right? The, the affordability crisis is a rampant, right?
Hmm. Hmm.
You- you- because of the skyrocketing housing cost, especially from the pandemic housing boom to
Right.
right now, and the elevated mortgage rate, more and more people are being priced out of home ownership, right?
Hmm. Very
The-
true.
We have a 40-year low in affordability. So even with the
Mm.
economic uncertainties that's going on today, and I'm going to
Right.
get into that. I'm not an economist, neither are you.
Right.
Would you agree that a lot of people are living paycheck to paycheck?
Oh, absolutely.
A lot of people cannot afford to buy a house as an American dream because they have to come up with 10%, 20% down payment to buy a house to live.
Right.
And because of the, uncertainties, because of whatever, they were right now we've seen the highest rental situation ever in America's modern history, right?
Hmm. Hmm. Absolutely.
So I'm not saying that's good or bad, but as a landlord, you and I, we have more renters
That's true.
that renting our rental units.
Right.
Okay,
Very true.
it's good for us. We are on a winning side of today's economic environment as
Right.
landlords,
Hmm. I agree with that.
and people, yeah, many families have a stable income. They can rent. They can buy. That's fine. They cannot buy. They have a delayed American dreams, and
Mhm.
they can pay. A lot of people can pay $2,000 rent to rent a nice single family home,
Right.
the one we have, right? As a
Sure.
landlord,
Hmm.
our kind of rentals. But some people, they have a lower demographics. They pay less money, and they can only afford to pay you like $800 $1,000, right?
Right.
So
Hmm.
this co-living up and coming, very fast up and coming space
Right.
is really getting a lot of buzz, getting a lot of
Hmm.
a lot of buzz, a lot of momentum.
Right.
You can,
Right.
if you own a 3 bedroom, 2 bath, you can rent the house, depending on what location, of course, right? You can rent by the room, $800, $900 per person. And,
Correct.
and I'm not talking about students. I'm not talking about college students. I'm talking about regular people that have a regular job, maybe
Hmm.
probably single, right? Individual who and that they are limited in their budget. They can afford to pay you $800, $900. Now, Julie, I know this asset class is brand new, but some people thinking, oh, I could never convert my house into a co-living space because all the strangers sharing room together. But that's where the due diligence comes from. That's where the renters, they sign a contractual agreement.
Hmm.
They cannot do certain things. There's a house rules they must comply with. If they fail to comply with the written contractual house rules, they will
Right.
get evicted. What are those
Mhm.
house rules associated with co-living? I mean, you can't play loud music. Okay,
Right.
you cannot invite several people into
Hmm.
your room and party and to turn on
Hmm.
piece
Right.
of music. You
Right.
can't dirty up the house and not take care of it. Oh, you can't poo in a bathroom and not flush.
Right.
I mean, this is real. These things are, people does that, right?
I understand. That's a very good point. Hmm.
And of course, you do a criminal background check and all that.
Sure.
You set the house rule, then every tenant must
Hmm.
comply with each other.
Right. Right.
Each rooms have a separate locks and this and that. But I'm not
Right.
going to go into more details because I don't know. Because
Mhm.
I'm just hearing so much buzz.
Right. Yeah, I can kind of see that, like in, maybe college towns, where you have a lot of students. That I could see that working with them.
Not
Yeah.
even.
Not even, he said not even
Not
that.
even. See, right now I understand. People like you just barely heard about it, but
Right.
it's not college towns. You're located in a density, urban environment.
Okay.
if when you own a three-bedroom, four-bedroom, five-bedroom house
Hmm.
or duplex or multi-unit, whatever,
Right.
and uh, and you rent to regular people, the people that may not have cars. So
Okay.
the tenant, this kind of a co-living tenant, they live in an urban environment, a lot of
Okay.
high density because like people living close by, you have
You,
access to bus line, trains, very close by, transportation, subway, right?
maybe like New York City, places like
Yeah.
that. I don't
Well,
know.
near city is too expensive.
Yeah. Oh, good point. Yeah, New York's too
Yeah,
expensive, right?
I know what you're saying. I know what you're
Hmm.
saying. But I'll give you
Hmm.
more details. I've got a few more slides to share.
That's interesting. Yeah. Okay. Interesting concept.
It is by no means I'm promoting this because
Right.
I'm just like you and I'm learning about it the past
Right.
years. Some real estate gurus, they swear up and down this is an up and coming asset class, right? And
Hmm. Hmm.
but you have to anyway. That's all I have to say. All right, so
Yeah. You have to do your homework on that one too,
yeah,
for sure.
listen, a
Hmm.
lot of landlords, oh, they're not willing to take the risk, right? I understand.
Yeah.
I I
Hmm.
I totally get it. Me, I would probably not do co-living because I don't want the risk. I don't want to. Who knows? I mean, even if you do all the pre-screening, I mean, one of the tenants could be a serial killer.
Right. Exactly. You never know.
No,
It
right?
happens.
Personally, I would not do co-living. I mean,
Right. Yeah. Oh no. Yeah.
but some people still would because look, if you have a four-bedroom house, maybe five-bedroom house, and each house rent for $800, just do
Right. 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 Yeah.
800 times five bedroom. We're
Hmm.
talking
Hmm.
$4,000 in monthly rent,
Right.
right?
Yes.
Yeah,
Hmm.
yeah.
That's what.
Some people are high risk taker. They're willing to pivot into this kind of model.
Hmm.
If they're willing to do so, they have to understand. They have to mitigate the risk and
Right.
it takes. And but I still see a lot of people doing it because the cash flow is too high. That is too
Right.
enticing. The risk. Some people are willing to take the risk to become a landlord to do co-living.
Right. Okay. Well, that'd be interesting to hear how that progresses, how that strategy progresses.
Exactly. So that's
Mhm.
okay. So therefore, I know, Julie, you know that I promote around five housing market, upstate New
Mhm.
York and North Texas, Dallas Fort Worth, and of course Oklahoma and South Texas and Alabama and Central Florida, right?
Right.
Of
Correct.
all the markets, to be honest with you, you know my markets because you've been my member.
Hmm.
You see email newsletters coming from our organization on a
Correct.
daily basis. You know the kind of strategy that I promote. But
Hmm.
having said that, I believe my Dallas, North Texas market is prime to do this multi-investment model strategy. Long-term rental, you start off with long-term rental, that's a foundation. Then
Hmm.
potentially do some further research in the next few years, whatever, even now for mid rental. Airbnb, I'm not going to talk about Airbnb too much because right now, North Texas, there are very few restrictions associated with short-term rentals
Hmm.
for the foreseeable future. But who knows about the future? But yeah, you can do short-term rental as well in
Hmm.
Texas because of the infrastructure, because of the massive growth. I'm not going to talk too much about North Texas right now because I produce North Texas videos almost on a weekly basis, right? You see that, right? So,
Right. Yes. Yes. Yes.
but
Hmm.
I should say for people hearing this, watching this presentation for the first time, there's a reason why I'm picking, the Dallas incredible. We've not the fastest, one of the fastest growing housing market in the country, bar
Hmm.
none. All the data, I'm not going to go over the data, very fast growing, shortage of homes, tremendous appreciation, tremendous demand for rentals, higher cash flow, more potential for long-term value. Look at today, the DFW Metroplex is number four in population, 8.5 million. In about
Hmm.
5 years, it'll be number three.
Oh, wow.
It'll surpass Chicago. And by the end of this century, we're not gonna be around then.
Oh, yeah, good point.
DFW, 65 years later from now,
Right. Yeah, maybe not.
yeah, DFW Metroplex will be #1 metro in the entire
Oh my
country.
goodness. Yes.
Larger,
Wow.
larger in population than Los Angeles County, largest than
Mhm.
San Diego County, than Orange County, California, the Bay Area where I live, San Francisco, larger than New York City Metro, larger than
Wow.
Chicago, larger than anywhere else.
Hmm.
So
Wow. So that's that kind of density that you're talking about
yeah,
with the previous strategy. Oh, okay. I can see
absolutely.
that.
Yeah.
Hmm.
So okay, let me fast forward. We already spent 30 minutes. I mean, I only have 5 minutes left. Okay, so let me fast
Okay.
forward my slideshow real quick. Okay. Uh, of course, my listeners can replay
Mhm.
the video and they can pause the screenshot, right?
Right.
But
Right.
yeah, North Texas have the best multiple monetization path, as I
Hmm.
discussed, right? And
Right.
the foundation you buy right now in North Texas for
Hmm.
based on this pro forma, based on
Right.
cash flow, right? Okay,
Right.
very, very simple. That's all. Okay, then if you want to, you can pivot into this other investment model, or you can
Hmm.
stay as a long-term rental methodology forever, which is perfectly fine.
Right. Right.
Because if all else fails, you can always fall back the stairs, fall back
Hmm.
to the stability of a long-term rental, right? So
Correct. Absolutely.
you
You
have
have options.
yeah, you have mitigate your risk. You have a backup plan in case all
Yes.
else fail, right?
Correct.
Isn't that what risk tolerance is all about?
Absolutely.
You have a backup plan. You're not gonna crash and burn because you have done all the research and due diligence, right?
Absolutely. You're 100% correct.
Okay, and of course, some people asking, oh, what kind of place you can do? Look, we have new hospitals in Sherman, Texas, right? It's the Silicon Perry of the country. Uh, you know,
Hmm.
in every boomtown that we promote in North Texas, we have
Hmm.
new hospitals, new colleges, new industrial complex, new venues everywhere popping up. That's why I believe I'm the first real estate gurus out there that promoting this North Texas market as a
Hmm.
multi-dimensional investment model strategy. And all the so-called real estate gurus, fake or otherwise,
Hmm.
they have no clue what's going on in North Texas, right? They just don't know
Right. Right.
what I do. Okay,
Hmm.
yeah, so all the boom, look, this one another example of a boomtown, Corsicana, in southeast suburbs of a DFW. They have some nice things, amenities going on where outdoors and everything else. You can midterm renter or Airbnb renter can be successful. And also, you also like in Frisco, there's a Universal Kids Park, like a Disneyland for kids,
Oh,
huge complex being built, finished by next year in Frisco,
oh,
northern part of DFW.
nice.
There's so many lakes and amenities popping up all over North Texas. Let me give some example.
Hmm.
Okay, like a few local restrictions on MB so far in North Texas, strong tourism and business
Right.
demand all over North Texas, DFW,
Right.
income dynamic pricing. Look, there's a new amphitheater, new concert amphitheater built in McKinney. Okay, McKinney, like
Hmm.
25 miles north of DFW, downtown. The North
Right.
next headline act, this this 300 million amphitheater in McKinney, one of
Wow.
the fastest growing boomtowns,
Hmm.
concert venue. And just a example. Oh, this thing is yeah, and 20,000 seats, 300 million, 70 concerts a year, and in McKinney. Look at all this. Okay. I mean, major
Hmm.
concert groups, musical groups opening next year, 2026, in a few months. I mean,
Yeah, wow.
yeah,
Yeah, I see the attraction. Hmm.
yeah, this kind of venue just will is a appreciation potential. It's a major anchors for the boost neighboring values. Then you have short-term rental and rental demand, right? Take advantage of
Mhm.
20,000 seat, so consistent visitor inflow. Then you have the neighboring commercial expansion in McKinney, dining, retail, hospitality, follows the entertainment, job creation, infrastructure, boosts the roads, hiring, local revenues.
Mhm.
Then, of course, in Sherman, of course, you have the semiconductor boom going on in Sherman, Texas, 40 billion
Mhm.
with Texas Instrument. Then you have corporate relocations across fast rising Plano, Frisco, McKinney, uh,
Mm.
and what have you, rising population in Collin and Grayson County. North Texas is the economic and cultural engine of the region. And then
Mhm.
in Denison, which is 10 miles north of Sherman, they're building this place called Preston Harbor, 6 billion development, 7,500 homes, 500 plus jobs, resort, hotel, retail, restaurants, and even Margaritaville Resort. So
Mhm.
this will create a midterm rental strategy. They will create the
Mhm.
Airbnb strategies. And
Mhm.
the single family homes were promoted in Denison. It costs only like low 200K. I'll show you.
Mhm.
Okay, this is the Preston Harbor. It'll be built within a year. Okay, look at
Nice.
this is this is the playground, and there's a lake. There's a Lake Texoma. Lake Texoma right next to Denison.
Mhm.
So I believe there are vacationers gonna go play
Mm.
work in Lake Texoma next to Denison. It'll create
Right.
a boom for mid-term rental and short-term rental for the.
Right. 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 Mhm.
But now, if you are smart, you buy homes while the homes are cheap in Denison. Okay,
Right.
201K, rent for 1,800. You can cash flow like $300 per month. Brand new, Class A location right now, right?
Nice.
You buy this for long-term buy and hold right now. And
Right.
if and you want to as a landlord, next few years, once Preston Harbor gets built up, you may convert to a mid-term rental or short-term rental, right?
Right. Nice.
Or if you even smarter, you can buy a brand new duplex in Denison, which is kind of rare. It's not too many multi-units brand new located in North Texas, just so you know.
Mhm.
But once in a while, we do have these opportunities. Once every 2 weeks, we have a duplex brand new where you could have multiple doors, multiple streams of income. You could
Right.
right now you can do it long-term rental on both sides, right?
Mhm.
Later, you can convert one of the unit into a midterm, or short-term, or passive,
Right.
co-living, whatever, right?
Right.
You have multiple strategy with different strategy. When you have a duplex or a triplex or fourplex, right? If you have the money to do so, and by right now, where you can cash flow using long-term rental in Denison. Again, co-living pass split model. We already discussed, you have to pay the utilities as a landlord in
Mhm.
spaces. You can generate multiple script. So behoove you to buy maybe at least a a 4 bedroom single family home right now to
Right.
potentially put yourself in a position to convert into a co-living model. Or
Mhm. Mhm.
when we do a 3 bedroom either, but if you can find a 4 bedroom instead of 3 bedroom single family home, with the intention of converting into a co-living strategy later on, then
Right.
you might want to do that. And this guy is a real estate guru. His name is Jamil. He's pretty famous YouTuber. Okay.
Hmm. Okay.
I don't know him personally, okay?
Right.
I don't know him personally, but I just saw he's the guru he's the first of potential many gurus that promote
Mhm. Mhm.
co-living, right? He
Right.
has a platform which is Pad Split. Just Google padsplit.com, the website, and
Okay.
see him. So Jamil, actually in a video I just saw, and I took a screenshot of one of his.
Mhm.
He mentioned that the top 6 markets for co-living space asset class.
Mhm.
Guess what's on there? Dallas,
I can see
Texas.
Dallas, Texas down there. I can also see is that Austin at the top? Austin, Texas on the top left?
And
Yeah.
again, I don't know what kind of data he had to support that,
Right.
but it's enticing because we have our market in a DFW right now, right? My team is
Mhm.
there,
Right.
and he mentioned the best co-living market for right now. Things are changing. Number one, Austin, Texas. Number one is St. Petersburg, Florida. Number three is
Mhm.
Denver, Colorado. Number four is Phoenix, Arizona. Number five is Atlanta, Georgia. And number
Okay.
six is DFW, North Texas, Dallas.
Hmm.
Now, let me tell you what's the distinct difference between those six markets. Give up the median price or the other five markets, at least 400, 500, 600,000 million.
Mm-hmm.
They're a lot more expensive.
Right, correct.
Order to cash flow, the rent to value ratio are not the greatest.
Hmm. Hmm.
Number six market, according to Jamil, is the Dallas, Texas, where
Hmm.
tell the price point, the trigger point makes sense. You can cash
Hmm.
flow much affordable,
Hmm.
right? Much,
Hmm.
much, the price of a home is much cheaper
Correct,
in DFW compared to other five other high cost market.
right,
So if you are a potential investor who want to explore co-living, would you buy your rental property in those other five markets based on the numbers crunching, or would you
right.
buy DFW? What would you do?
Oh, DFW totally makes sense. Yeah. It's a kind of a no-brainer, right? Yeah.
I rest my case.
Right.
I'm a little
Absolutely.
bit, I'm a little bit biased. That's whatever. That's fine. Okay, let's be real quick. Okay, I spent more time than necessary. Maybank, one of the North Texas boomtown we're promoting. You
Hmm.
can buy a five-bedroom, three bed,
Nice.
800 square foot.
Wow,
This is
220,000.
not a
Oh my gosh.
misprint. What is the price?
That is unbelievable. 221,990. Oh my gosh. For a five-bedroom house.
I just did a rental comps with the odometer. The rental
Hmm.
the rental comp indicates it rents for $2,000.
Oh my goodness.
You cash flow easily during long term. In
Yeah.
next few years, Maybank, if you convert it to co-living,
Yes.
you can rent the five doors even at $700 per room.
Hmm.
725 is like 3,500. So you cash flow
Hmm.
crazy.
Right, 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 right. Wow. That's awesome.
You're not going to get 221K, 1,800 square foot five bedroom in North Texas
Hmm.
in any other market in the country.
Right, 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 right. Wow. That's amazing.
That's insane. Not only that, we have 18 emerging boom towns located within DFW corridor. Strong
Mhm.
infrastructure, job growth, high proximity to between submarkets. Look at the 18 boom towns. Any of these 17, 18 boom
Mhm.
towns, oh, I forgot to add a couple more. Uh, I lost count how many boom towns we
All
put
right.
on a monthly and weekly basis from our team in North Texas. Suffice to
Right.
say, I don't know which one, but any one of these 16, 17, 18 boom towns,
Hmm.
you have the potential, no guarantee whatsoever, of course,
Sure, of
to
course.
convert the long-term rental into mid-term, short-term, and
Mhm.
co-living.
Right, right, right. So there's a lot of opportunity, I think, is the point you're making.
Is that the point I'm making?
That's the point.
Look, in North
Wow.
Texas, while most regions experiencing this level of tech-driven growth in North Texas, DFW, already
Hmm.
seeing home prices soar past 500,000.
Hmm.
In North Texas, Grayson County, Sherman, these high-tech boom towns, we still have incredible opportunity for low
Right.
to educate,
Hmm. Hmm. Right.
creating a absolute historical rare opportunity for investors to get in early
Hmm.
before the values will inevitably climb.
Right, right, right.
You buy
My
low.
goodness.
Yeah, go ahead.
No, it's just really amazing. I mean, they always say everything goes bigger in Texas anyway, but there's a tremendous amount with the influx of people migrating to Texas.
Yeah.
Yeah, it's creating a lot of opportunity for people that are ready to get into the market now.
Yep, yep. Look at this. I'm not going over this because pause the
Hmm.
screenshot and
Right.
digest this absolutely incredible data and form your own opinion. Those people watching
Hmm.
this video. Tech boom, financial hub boom. North Texas is the hub. Uh, I don't know. Uh, I can't say anymore. Okay, let's continue. Look at this Texas Instrument
Wow.
semiconductor hub being built, Texas
Huh.
in Sherman. Amazing,
Unbelievable.
unbelievable boom. And this is another high-tech company building in Sherman, Texas, which
Right.
steady cash flow, home appreciation, tax benefit, long-term growth,
Hmm.
scalable, refinance, and do a 1031 in 3 to 5 years and buy more
Hmm.
property using the equity, semi-passive investing. North Texas, the foundation and financial boom town. And look at this cash flow. Look
Right.
weekly listings off market. Look at this, Enos,
Hmm.
Texas,
Hmm.
33K, rents for 2,100, single family home, brand new, 4 bedroom,
Hmm.
rents for almost $850 per month.
Wow.
This is not a misprint.
No, that's even just the HOA. I know I've kind of tended to my personal stay away from properties that have HOA, but the HOA is like so low on that. It's not
Yeah,
even,
yeah,
it's
like,
not, it's a non-factor.
yeah, like less than $100 per month. That's fine. Okay,
Yeah, that's great.
if that's fine. I can deal with that. Another
Hmm.
Enos, another boomtown in North Texas,
Nice.
brand new, 253. Okay, rents for almost 2,000, cash flow annually,
Not
45,
bad.
monthly almost $400 cash flow.
Hmm.
What more can you ask for? Almost a 1% rule that people
Hmm.
have not heard about. Look at this, single family home, 274K, rents for 2,050.
Hmm.
30% down
Nice.
payment, 30% down payment, and annual rent, net rent 8,100. So monthly
Hmm.
net
Hmm.
cash flow around $700. This is incredible cash flow and great potential appreciation. Josephine, another boomtown, uh,
Hmm.
215K purchase
Nice.
rent for 1,900. Look at this rent to value ratio is off the chart.
Hmm.
Cash flow around $400 per month. Okay, I mean, each look at this. This is the lowest cost new
Oh my
construction
goodness. Wow.
in a B plus uh, class neighborhood.
Hmm.
65K brand new 3 bedroom 2 bath, rents for 1,450 and cash
Hmm.
flow for more than $300.
Mm.
This is
Wow.
right, amazing, right? We're
That is nice.
a booming market, great renters, class A locations in
Right.
Maybank only costs 165K, less than
Wow.
200K on its booming market, uh, excellent locations. It's just,
Hmm.
of course, this handful of property in Maybank I just talked about, I think they're all gone. They were promoted about 2 weeks ago.
Oh, wow. Really? Oh my
Yeah,
goodness.
so this builder just provided this short, small window of inventory. I think they're all
Right.
I
Right.
think the minute this property was promoted to my network a couple of weeks
I
ago,
can understand that. Yeah,
I believe they'll sold within a few days. That's
I'm sure it makes, I mean, that's an incredible value.
yeah, yeah,
Yeah, and I don't know what the values are going for in that area, but I know that with the way people are purchasing them so quickly, it's going to force the
yeah.
appreciation of the properties up.
There's a shortage of homes, right? There's too many people
Yes,
moving in. There's 500 people moving to North Texas every single day. 500.
I believe it. Probably they're all probably from California too.
Yeah, a lot of it. Yeah.
490 of them are from California.
So just to prove to you, again, I did my independent research on this kind of property on this address, right?
Mhm.
You know,
Right.
and then my rentometer uh, uh, uh,
Oh yeah, yeah, yeah. I've used that before.
supports
Hmm.
the rent. 2,000,
Hmm.
2,000 square foot,
Hmm.
2,200,
Nice.
a little bit more than 1,700 square foot, almost 1,800.
Hmm.
So 1,800 to 2,100 uh,
Hmm.
within a couple of mile radius
You're
from
right.
this home that was promoted in Maybank 2 weeks ago,
Hmm.
right? So right off
Nice.
the bat, even a big house like this, cash flow with 30% down, 25% down.
Hmm.
So see,
Nice.
I see, I show you the data. I show you independent vertical
Right.
research. I mean,
That's real.
I'm not giving you hype. I'm giving you data points. I'm giving you the
Sure.
metrics. Okay.
Hmm.
You out there, you're watching my videos. This is data driven. You can find this kind of data everywhere. Okay.
Hmm.
Another Maybank, 190,
Hmm.
1450, more than $500 monthly cash flow. Partly because we got the builder will give you a rate buy down anywhere from
Right.
4.2%, 30-year fixed to
Oh,
5.4.
nice. Nice. That's
First
very
year,
nice.
and build the incentive, right? First year property management is free, and
Mm,
the seller going to pay you 1% seller closing costs. That's the
that's deal.
you and I. You've been part of my network for a few years now. You know the power of the
Mhm.
community of network of thousands of investors I have on my network.
Absolutely.
They
Hmm.
get access to this off-market opportunity, which is amazing buyer's incentive you will not going to get in 6 months from now. Builder incentive is going to be gone in about 4 to 6 months, especially when the
Mm,
mortgage rate come down below 6%.
there you go.
All the people going to come off the sidelines.
Yes, yes.
Then your price is going to rise. You have more competition. There's less inventory, and so people doesn't have this mentality. You have to be contrarian, right? You buy
Correct.
now when there's very little competition. You know what I mean?
Right, right.
Yeah. Okay. I just say I don't want to do. I got a few more slides that I'm not gonna. I already spent 45 minutes on there. I can't believe time flies when.
Well, it does fly, but it's really good information. It's got me thinking, oh, that might be my next to look in Texas, because there's so much.
Yeah, so put
Mhm,
yourself in your shoes again at the beginning. You are typically, investors out there. You're part of my network. You
mhm,
represent several thousand members from my network and other
mhm,
people that want to come into my network from wherever
mhm,
where you're from. So,
mhm.
speaking on their behalf, you want.
Well, that's interesting. I'm just thinking after listening to just the Texas market and just all the markets that you work with. Us coming in fresh, brand new, we didn't know anything about investing. The only market we could relate to was California because that's where we live. And what we realized, and I think this is probably reflective of a lot of people maybe watching this video, there is more opportunity than you think. I mean, there just is. I mean, we had no idea. So I think there's more opportunity than you think. It takes less to get in than you might think, and I think most people with the markets that you're representing, I would say 90% of the people that are probably listening to this can afford to get in into one of those markets. And then it's not as difficult as you might think either. So I would just kind of throw those out.
You know, stopping most people, you and I discussed this many times. You know, fear and people been bombarded with so much negativity out there because
Right.
that with the power of the technology, power of social media, and all the doom and gloom video content we see out there, housing crash bros, they
Mhm.
brainwash everybody, and economic uncertainty, this
Right.
buzzword, all these excuses prevent people from taking action. So
Yes.
from that perspective, how do you encourage people to overcome all that?
I think for me, the more information I have, it helps me overcome fear. So I think connecting with the network, with your network, where you have like years and years, 30 years of experience in doing this, it really helped to ease my conscience, help me kind of direct where I need to do my research. And then for me, like I said, research is key. Once I did my due diligence, I was ready to rock and roll. But I think you have to get the information first. And like we talked earlier, there's so much information on the internet. You just got to narrow it down to what's your buy box, get with a professional that can mentor you and pull that trigger.
That's right. Execute and take action. Even
Mhm.
everybody's fearful. I mean, you can still have
Yes,
fear and still can able to take action.
absolutely. Absolutely.
And you did it, and a lot of people can do it too. So
Mhm.
anyway, that's all I have to say. Thank you so much for sharing your
Thank you.
thoughts.
It's been great.
Thank you, everybody. Thank you so much. Have a nice day. See you guys next
Have a
time.
good day. Thank you. Bye bye.